Just waiting for a moment until everybody joins us. We'll be starting in 1 minute. Right. I hope that everybody's present and hearing me. Welcome to all of you all over the world. We have many, many participants today. This is the last of the series, New Models for New Times, Rethinking the Art Market in the Changing World. It's brought to you by The Art Newspaper, live, in partnership with Cromwell Place, the shared exhibition and workspace for the art world. Our conversation today is with Dr. Clare McAndrew, the leading economist of the global art market. She's the go-to source for facts and figures about the art trade. Clare prepares the annual Art Basel UBS Art Market Report and many others as well. We're so grateful to her for finding time to talk to us in her very busy schedule. During this COVID year, she has also published a mid-year report with UBS, and we are all anxious to hear what she's discovered, how the figures stack up, and importantly, how she sees the future for the art trade. So welcome, Clare, welcome to all of you. I'd like to jump straight in. Clare, let's start with the latest results of your research. So what have you discovered?
Thanks very much, Georgina. Thank you for the lovely introduction. It's great to get a chance to talk to you and to talk to everybody joining today. We have done a little bit of research. It's only a representation of a part of the industry, but I have a few results I'm going to share on a couple of charts. I won't give you too many figures, I promise, but just to show you the results of some of the gallery research we did. And we conducted this in July, so it's relevant to the first 6 months of the year. And it was a difficult year. I don't think it's a surprise to anybody that the gallery sales were down. The average was 36%, and this was kind of what we were hearing as well. I'm sure it's the same for you when you're talking to galleries. They were kind of saying things are 30–40% down. And I mean, you'll see from this chart, it was pretty difficult across the board. Certainly the galleries that turn over less than 500,000 probably fared a little bit worse than those that turned over higher levels, but there was pressure on all the different segments. And I think you'll see in that chart that the worst performing was what we might consider to be the kind of mid-range galleries, so 250 to 500,000. Their sales were down 47%, so they were kind of the worst performing in that first 6 months. And it's difficult because they were probably the most vulnerable in many aspects going into the crisis. I mean, I think obviously stating the obvious to say people that went in a better position to the start of 2020 will kind of be able to weather this better. But I think all galleries are under pressure. It's a difficult industry. They're heavily reliant, obviously, on events that have all been, for the most part, cancelled this year. They're based around travel. And they're basically based around people's kind of discretionary spending. So, people are still earning this year. So it's different, it's not the same as some of the financial crises we've had in the past. There's still a lot of kind of pent up demand, but it's just been a really, really difficult year. And I mean, this was the first half of the year. And we did ask galleries as well how they see, the entire year. And we won't know the kind of the full facts until the end of the year. But, about 80% of the galleries we surveyed thought their sales would be down, and some down considerably. And I think, we're looking at kind of second waves. I know everything's just gone on lockdown here in Dublin from midnight last night again. So all the galleries and museums are closed here. And I think that's happening in various parts of Europe for sure. So we certainly don't have this kind of neat start and finish that perhaps we all expected when we were first looking at this back in the early months of the year. There is a little bit more optimism to what might happen next year. We asked galleries to project how they thought 2021 would go, but still, I mean, less than half of the galleries that we surveyed thought that their sales would pick up in 2021, and that's not great as a finding, but it's also a pretty poor benchmark to be basing your kind of predictions against. So there's not a huge amount of optimism. I mean, there is some very kind of happy outliers. You know, we saw some people that have done pretty well during this period, but they are the minority. And I think it is that it's some of the smaller galleries were a little bit more optimistic, whether they're possibly less reliant on fairs and maybe doing a little bit more online anyway. And I guess some of the bigger galleries might be a little bit more financially secure to kind of see them through this period. But it's that mid-size, I think the mid-size gallery, which was probably the worst affected in the last global financial crisis too. They're the kind of ones that we're particularly concerned about. This wasn't related to the research, but I did do some, you know, I think it's good to see both sides. So I did look at the auction sector as well. And this is only a very partial view, but I have another slide that just shows some of the auction sales for the first half and the first 3 quarters of the year. And in the first half, if we just looked at fine art sales, sales were down about 50% across all auctions. It's interesting, the volume of sales was only down 20%. So, you know, there's still a lot of activity going on, but the value is down about 50%. And this is just Christie's and Sotheby's to give some kind of indication of what might happen for the year. And this was in the first half of the year. You can see the black columns are 2019. Total sales were down 66% on that same first 6 months of the year in 2019. So they went from like less than 5 billion to 1.6 billion for these two houses. So a big drop in sales. I was tempted for this to do something on the third quarter, because both of these houses, you know, everything's usually very quiet in the third quarter, but both Christie's and Sotheby's had a very, very good third quarter. You know, if you compare Q3 2020 to Q3 2019, it's nearly double the sales. So there was no kind of summer break at all. So that did help things a little bit, but still, if you're looking at the results for the first 3 quarters, you see that they're down 39%. So it's kind of a similar trajectory to the galleries, you know, making it up a little bit, but a very, very rough first half of the year. And I've broken that down again. There's another slide just after that to show you online and offline. And again, you can see, you know, online sales have been huge. It's the same in the gallery sector, but in the auction sector, they have grown over 900%. So they were from a really small base of about 100 million in 2019 to over 1 billion in 2020. This is in the first 3 quarters, and they've gone from being like 2% of their sales to over 50% of their sales. But it's the big drop in offline sales that has dragged that down substantially. So it's you know, it's a difficult start to the year so far.
Difficult start and quite a difficult continuation.
Yeah.
So Claire, you've been speaking obviously to a lot of galleries. Anecdotally, what are they telling you? How are they telling you that they've, you know, while you've been doing these reports, what have they been telling you? What are the conversations you're having with gallerists and with other art market players?
I mean, more or less that it's been a difficult period. I think, you know, a lot of galleries in particular are just doing the best they can to focus on cutting their costs, you know, because their sales are down. So it's all very kind of cost focused, all the kind of things they're doing, and, you know, looking for what strategies will survive this year and then give them some growth going forward. You know, I talked to some people in the auction sector quite recently as well, and it's kind of a little bit matching with what some of the galleries were saying as well. I think there was a bit of a burst of activity and excitement maybe in June and July, especially perhaps in the auction sector before the summer. Some people saying that it's kind of dying down a little bit now, which is a kind of a worry. It's not that necessarily the totals are bad or the sales are bad. It's just that the market is being really choosy again. So there was kind of a burst of activity for a little while. Now it's kind of tapering off a bit. And, you know, we don't have those spots in the calendar that we've always kind of watched. I mean, I think there is a lot of people waiting in the next couple of weeks to see what happens. I was checking the date to see how the election in the US is going to be a big thing for confidence generally. But, you know, when the market gets choosy, you know, there is this knock on the secondary market, on the supply side and stuff like that as well. So it does become, there is a lot of kind of domino effects that can happen when things sort of slow down. But I mean, hopefully, you know, the art trade wasn't optimistic about their second half in the middle of the year. I think a lot of areas are seeing these second waves, which are having, businesses are closing again in some parts of the world. So that's not a reason to be cheerful. But things like the mood can change, and people are kind of holding back a little bit till we get into November to see what happens then. So hopefully the second half of the last quarter will make up a little bit of that headway.
Yes, well, we shall see. Now, you also looked at the issue of employment and downsizing, which is another very possibly dramatic effect. Could you tell us a bit more about what you discovered?
Sure. I think I have one more chart that just shows a little bit from the gallery survey about employment, and this is, I think, one of the biggest concerns that a lot of businesses have is there's a kind of a knee-jerk reaction to one of the things they can do to cut costs is to kind of get rid of people. But unfortunately, in the gallery sector, businesses are, for the large part, kind of very small. The average gallery size in the survey we did in the Contemporary Modern Gallery survey was only 8 people, and that's including full-time and part-time and contract workers and things. So 1/3 of the galleries that we surveyed had to downsize in some way in the first half of the year, and the average downsizing was 4 people, and around half of those were full-time people. So when you're starting off with an average of 8 and you're kind of downsizing by at least 2 full-time people, that's very significant in the sector. I mean, I think some of the biggest galleries probably had the biggest losses because they had the most room to maneuver there. But even in the mid-sized sector, I think it was 40% of galleries in that 250 to 500,000 segment downsized, and they started off with an average of only 5 people. So I think it is very, very difficult. And I think galleries that they did see this kind of the worst being over in some regards, whereas for the most part, but I think some are worried too. A lot of them have been really reliant on the supports they've got for the first half of the year. And this is going to be very telling in the next time we survey them, because it'll be very dependent on where they are, how supportive different governments have been, whether it just came to a kind of a grinding halt or whether they kept things going. A lot of governments are doing their best, but I mean, there's a lot of industries and a lot of different people to support over this period. So I think we will see the sector shrinking, hopefully temporarily, but I think galleries will close, and that has implications for the economy and for the artists that they represent, and for all the businesses that surround the art market. And it's a very personal business, the gallery sector as well. So it's difficult just to kind of staff up and down like you might in another industry. People are talking about getting people with new skills if they do have to re-employ people when things pick up again. But I mean, you have to balance that with the kind of established relationships that go with a small gallery staff as well. So it's a difficult period, I think, for employment, and that's the big casualty. I think the number of businesses and the number of people employed, because it is a very high value employer. The economic impact of the art market goes well beyond its size. It's for the most part fairly gender balanced, high knowledge employer, and it has a lot of positive ripple effects through the small amount of businesses that operate in it. So that's the most worrying thing. I think sales can swing up and down a little bit, but for the people that have lost employees, that's going to be a big issue.
Oh dear. So can you talk us through a bit the measures that galleries have either put in place already or are putting in place, and are they seeing any positive results from that?
Sure. I mean, I suppose the biggest thing perhaps is obviously they've been selling more online, and I'm going to do this kind of pie chart of how galleries make sales, and we asked them in the survey that we ran in July, how are they making sales now versus 2019. And I mean, online has shifted from 10% of the value of their sales to 37% of the value of the sales. So the big, kind of lifeline for galleries has been selling online. And some of the smaller galleries were already doing a higher share, but it's the biggest galleries, the plus 10 million turnover galleries, that saw the biggest increase in their sales online. Obviously, the kind of corollary of that was their fair sales were down. So the pie is just kind of it's the smaller pie, but it's being sliced differently as well. But I mean, they have tried a lot of different strategies, and we asked them in the survey what kinds of strategies they were using more, and what kind of strategies they were using in reaction specifically to the crisis. And I think I have one final chart that just shows what were the most popular strategies used by galleries. And it was everything from, the commercial kind of viewing rooms to make sales, initiatives, joint initiatives with other galleries, whether it was for exhibitions or just for communication and for information sharing. I think it's interesting that the two biggest or most popular strategies that galleries were using were enhanced online content production and social media activities. So very much focused on who the gallery is, where they're placed, and kind of telling the story of the gallery and the artist it represents. So rather than just focusing on commercial sales, where possible, galleries have tried to position themselves online as well during this period. And we looked at it in the study a little bit, that there is a lot of galleries trying very similar strategies. There's a tendency. I mean, we've seen this before with collectors. When collectors are, one way to reduce risk is to all buy the same artists. So you're kind of relying on what successful collector peers are doing. And we've seen this a little bit in the gallery sector. One way to respond to a crisis is to kind of look at what you think your successful peers are doing, and to do similar things. And I mean, we have had that a little bit, that a lot of galleries are doing quite similar strategies. And I think you probably need to do that up to a point, but it does get to a point where it's becomes the pressure to kind of conform makes it difficult to stand out as well. And I think that's something that they're facing now as well. And I think it's interesting, some of the kind of more higher tech tools, the virtual reality and augmented reality were some of the least used. Some galleries have commented more on kind of personal aspects of connecting, kind of using the phone rather than kind of things like that as well. But I think these have a ways to go. I think these are all kind of developing areas. So I think a lot of galleries have used a variety of things. And I think also both talking to galleries and from the results of the surveys that we ran, it's really interesting to look at who they sold to during the period as well, because this kind of online selling and communicating has been really kind of pinpointed as a way to kind of reach new buyers in kind of more diverse regional areas. But I think in actual fact, from both the online viewing rooms at fairs and their own viewing rooms at galleries, a lot of galleries saying that they were actually selling to clients they're already familiar with the gallery. And some of them were new to online buying and to viewing their works that way. But I think there was only 26% were to brand new, of the online sales that galleries made were to brand new buyers. Which, I mean, I thought it sounded low, but then, when you think about it, in the times that we're in and the start of the year, it's actually not that bad to be reaching. I think, if you can reach some new people, and if there's anything they can do to turn them around into, even second-time purchases or ongoing purchases, they're collectors, that's not a bad result.
Actually, I mean, it's interesting that you're talking about collectors, because rather surprisingly, you found that millennials were actually the most active and higher spending buyers when you did your research, that they seem to have higher confidence in the market. What did you find when you were talking to collectors?
We did, in this same report that we did, we surveyed high net worth collectors in 3 markets, so in the US, UK and Hong Kong. And again, I mean, it kind of matches the research I've been doing with UBS on this kind of high net worth segment for the last few years, and that millennials were some of the highest spenders, some of the most active across all segments, and they're also very active in this in this period as well. I think it was a very positive. Look, we're always trying to find some positive news from the statistics, and I think it was very positive that over 90% of the people we surveyed from those 3 markets had bought something in the first half of the year, which is great news. I mean, they're a small group, but it was still kind of promising results. And I think it was 56% of across the board had spent over 100,000, but for millennials that was 70%. So 70% of millennials that we surveyed had spent over 100,000, and 17% had spent over $1 million in that period, which is fantastic news. Even though it's a small, tiny bubble of the millennials generally, and it's not probably representative of everyone's budgets. These are high net worth, so they have personal assets excluding kind of property of over $1 million. But still, it's promising that they're there. And you know, I think how
do you explain that? I mean, you know, we're in the middle of a pandemic.
I mean, I think as well, I was trying to think about this because somebody asked me this kind of, you know, why are they kind of more upbeat? And because, you know, I certainly have got more optimistic about things in some ways as I age. I'm just trying to think. I think it's got to do with kind of control. And there's been a lot of kind of papers in psychology and stuff written about, you know, what creates optimism. And I think there's a tendency that the more you're more optimistic about your own future. We saw this in the galleries as well. You might think that the world's falling apart, but you're quite optimistic about your own future. And it's the same. You might know that, for example, I don't know what the percentage is, 40% of marriages end in divorce. But if you ask somebody, you know, is the guy you're about to, are you 40% likely to divorce this guy you're going to marry tomorrow? You're not, you know, you're not going to say yes. So I think it relates to the degree of control you have, and you feel like you have more control of your life. So galleries were more optimistic about their own sales than they were about their peers. And I think this relates in a little bit to the millennials. You know, they had the most drive by far to get back into the fair and exhibition circuit. There was only 1% of the millennials we surveyed weren't actively working with galleries versus about 40% of boomers. So I think they feel a little bit, they're more in some way directly going to be involved in the recovery. And I think as well, there's a little bit of, I mean, I find myself doing this a little bit myself. There's a tendency to slightly there's kind of declinism, if you like, in older generations, where you kind of think the movement to kind of technology and online is kind of not as good as the good old days in some ways. So you've got a kind of rosy sort of retrospective view, or kind of some kind of a cognitive bias that things in the past were better. Whereas for millennials, even though they want the experiences and they want the live experiences, technology is the way they operate in all aspects of their life. So it's not necessarily seen as such a detrimental move for more of the communication and the interactions to be online, because it is in every other aspect. And this is what they're in charge of. This is their thing. So I think these kind of things, all of these things factor in. But I mean, as I say, these are snapshots of wealthy millennials that are buying at a fairly high level. So they're not necessarily representative of every kind of segment of collecting.
Have any notion about the geographical side? Because I've always been told Asians are so much more comfortable with the technology, the internet, buying over the internet. Did you break that down at all?
We did, and there was more comfortable buying online, and we asked the collectors a question about their preferences, whether they prefer kind of offline, you know, attending an exhibition versus online. And the collectors from Asia were more, even though there was still a majority, the majority was smaller that preferred online. So there is that. Although I think they were a little bit more hesitant to go to events as well. The collectors in the UK and even to the US to a lesser degree were more actively wanting to participate again in events. So they could be all kind of wrapped up together.
So that sort of segues us very naturally into the question of art fairs, because art fairs virtually all have been postponed. There've just been one or two that were actually held live, but most of them have been postponed. So how do you see the future of art fairs, at least until when traveling resumes, a vaccine is found eventually next year? You know, how do you see their future?
I think this is still a big question mark. I don't have any clear answers. I just kind of go back to my figures. I suppose that, you know, you can see that the sales dropped from nearly half of the share of gallery sales was 46% last year to just 16% for the first half of the year. And to be honest, that 16% I think is going to be lower again, because there was a few strong fair sales at the beginning of the year, January, February, March, before things were kind of closed down. So I think that's going to be even lower. I'm kind of slightly dreading that the pie chart, how I'm going to divide it up, because I mean, if you include kind of online viewing rooms for fairs, that's going to be another segment. So I'm going to try and get stuck into the detail there a little bit more. But I mean, the art market has very much been part of the experience economy. This is what's kind of driving participation and certainly new sales and new client generation. I mean, I think we asked the collectors in the survey at that point in time, would they be willing to travel to a fair locally or overseas? I think half said they would. Again, 70% of millennials were keen to, even before the end of this year. But I think, you know, if you look at galleries, they were already questioning how many fairs they were going to, whether it was that just the pressure it was putting on their businesses in terms of travel and costs, or their carbon footprint. I mean, that was kind of really, the sustainability was a huge issue in the art market before this crisis. It's getting slightly sidelined a little bit, but I mean, it's very clear, you know, the big problem was in this whole debate was the density of air travel. And, you know, we asked galleries in the survey about next year. And this is kind of imagining that things were relatively at that point going back to normal. And most were planning to cut down the number of fairs. So most people were saying they were doing 4 and they might do 3. But the bigger galleries, the 10 million plus, they went from an average of 7 to 4. So that's a big decline. So, I mean, there is this, I think this, even if everything kicks back into shape, even if we have a vaccine and we'll all start circulating again, I think this is going to be an issue. People are looking at this little pause has made us challenge the calendar, and it's made us look a little bit more about you know, what really works and how people want to interact in the market too. So it's given us a little time to reflect, I think, as well.
It's everything you've told me is not terribly encouraging, but can you perhaps comment on some positives? Time to reflect is one, perhaps collaboration. I mean, what we've seen was collaboration between galleries and auction houses.
Yeah,
are there other
positives? I mean, I think collaboration is a big positive that, you know, is kind of a positive spiral that will hopefully come out of this. You know, 60% of the galleries that we surveyed had done a collaboration specifically due to with somebody else, with either a gallery in their sector or another institution, in response to the pandemic. And it wasn't just, you know, joint exhibitions, it was other kinds of initiatives, whether it's information sharing or, as you say, with auction houses or with kind of universities or with hotels. Even there was a kind of a range of different things. And there's a lot of positivity about more local regional collaborations, kind of gallery weekends and smaller events that could be kind of combined with galleries that are in a more small location, that you could kind of, you know, hold exhibitions with a little bit more space than an art fair, and with using pop-up spaces and things like this. I mean, views are pretty mixed to what works and what doesn't work. I think it's challenging to kind of in the competitive arena sometimes to collaborate when there's a lot of kind of cost and revenue sharing, but there is a lot of other kind of partnerships, I think, that are being forged. And the kind of divides, I think, that usually slice up the art market, for example, between dealers and auction houses, and between bigger galleries and smaller galleries, and perhaps between kind of commercial enterprises and non-profit organizations. I think that's a very positive thing. I mean, even if it's a little bit forced, the things that work well, I think, are very positive. And I mean, I think, you know, even away from the kind of business side of things, I think it's really important for the trade to collaborate together on certain issues. And I think this crisis has hopefully shown a little bit of that. You know, for example, just in talking to government, a lot of auction houses and galleries are facing the same things from a regulatory perspective, for example. And I've only really seen it done really well in the UK. So the British Art Market Federation brings together auction houses and galleries, and they just collaborate on things they have in common. So they don't have to collaborate on everything because they're too competitive to do that. But you know, they do for issues that are affecting their future. It makes so much more sense to talk to government in one voice. And I think that's probably been highlighted a little bit, the positive aspects of collaborating on things that you can, and forming kind of partnerships where people were kind of fiercely competitive before. That could be a positive aspect.
It's good to find some positives. So tell me, sort of looking forward a bit, obviously there are changes at the moment, everyone's had to go online, but what do you think will remain as permanent changes? And when this because there will finally be a post-COVID period when things go back more or less to normal, but what will change and what won't change?
Oh God, I hope there is a post-COVID period. It seems endless at the moment. It really does. But I mean, I think, as you say, online, you know, will definitely stick around. It was rolling along and coming anyway. And a lot of the the businesses that are now being highlighted have been around for the last few years. There's some really kind of fantastic businesses that were doing really good things in virtual reality and exhibitions and stuff. And they've been around for a while, but they've just been kind of the light shone on them now. So I think online is obviously a huge thing. I mean, I think as I was saying, the calendar is kind of changing. Whether it's, art fairs are still continuing to sort of assess where they're at, and we could have a calendar that's based on, it's still on a couple of bigger events, but more smaller, regional things and those kind of, just it's not, we're very kind of, it was like clockwork, kind of, we're all on this kind of same cycle of events. And I think it's the same in the auction sector. I mean, they're having a lot more smaller sales. So they're not basing them all in kind of chunks like that. So I think the calendar is good. It could be all more year round, which I think is good and bad. There's kind of, I haven't, I don't think anybody I don't work directly in the art market, but anybody adjacent to it or working in the art market has had a break this year at all. So I know this is a particularly bad year, but so there's good and bad things about it becoming a bit more continuous trading. I'm not sure if that's, that kind of break during the summer was quite a good thing in some ways. I think one thing with the online that I do hope, and this might be kind of optimistic thinking, but I do hope that the price transparency that we've seen, kind of not only just for OBRs and stuff, but for in general, that prices become more transparent. I think it's a particularly kind of appealing attribute of the increase in online sales is that galleries do realize that having a price or price range does help both generate new buyers and also encourage, very well seasoned collectors to look at different artists and things like that. And people have budgets and they can afford things and they can afford different things at different times. So, as I say, it's always kind of, I always find it quite surprising with the fair viewing rooms of the things that you could possibly kind of at least aspire to or afford, rather than the things that, the things that are out of your league. So I think it's really important. And I think with returning to the surveys, the high net worth collectors that we spoke to, and I think it was 81%, so they definitely would be more likely to buy something. And then there was a further, I can't remember, it was about 14 or 15% said it was helpful. So I think it was only, only 4% of the high net worth collectors that we spoke to said that they didn't particularly want a price posted. So, most of those very well established or kind of at least seasoned buyers we're all for having prices posted. So I hope that does stay around. And also transparency in the auction sector is really important. The big auction houses are pretty good, but as more sales move online, it's really important that micro level transactions aren't lost, so we don't lose individual pricing. I mean, the galleries posting sales in online viewing rooms or something is one thing, but they're not, we'll never know what those items, what those works sell at. And it's really important, I'm not just saying this for my own benefit to make it so I can put the figures together in the auction sector, but for appraisers and for establishing value and everything, it's really critical that there is some kind of benchmarks for people to see what value is, even if it's not the full picture, that they have some idea of what past sales are. So hopefully that's something that this whole transparency thing is something that escalates from this.
So now I've got the $1 million question.
Uh-oh.
When you come to put together all your figures for this year, I think you even have a slide for this. I had one more. Yeah. I think you have one more slide about. Yeah. So how much will the art market have shrunk? I mean, what are your predictions for this year when you finally next year produce? Here we go. That's the one.
Now, this is not a new slide. So I made this back at the beginning of the crisis in March. I think the GDP line might be even worse now. But I mean, this is just to kind of to show the fairly significant drop if the art market doesn't tie in exactly with GDP either, obviously. But I mean, it's just to show that the different types of crises in the past, the art markets reacted quite differently to different crises, and each one is unique, and the market emerges kind of in a different way from each one. But I mean, I think we are looking at a fairly substantial drop in the market. I mean, we're already, I'd say, at a guess, we're down, if these galleries and auction sales are something to go by, we're down roughly kind of 30 to 40%. So unless there's a huge improvement, You know, the election could spur a whole kind of really good spree of buying. You know, I think it is going to be a very tough year, and we could see a substantial loss in terms of the value of sales. I don't think it'll be a surprise to anybody. I mean, I think this crisis, we're kind of economically a little bit better. Some countries are in slightly better shape, but it's the length of time it has gone on that makes it sort of slightly economically worse. So there's a lot of pressure, and as I say, some galleries were really only coming back from that dip. That dip is, you know, kind of within the last decade nearly, that they were coming back from the global financial crisis. So I think it is going to be pretty tough. I mean, I don't have the magic number, and I won't until we put all the figures together. But I think it's going to be a tough year.
So still there again, another very difficult question to answer. I mean, when will we, have you any idea of when we will return to what was normal, or will it be a new normal? Have we got to forget pre-COVID and this is going to be our reality? What do you think?
I mean, I do hope that things evolve from this. I mean, this is how change happens. You know, it's often something that's a completely kind of comes from somewhere just to spur on some of the things that were kind of moving very slowly. And I know we're going to transact and kind of communicate a lot more digitally, but I think that the offline experiences that we will have them again, and I think they'll be even more special, and that we'll think more about quality than perhaps just about volume. I think I was just kind of looking back on some research I did for Sanoa there the other day about the kind of decline in the retail gallery. This is kind of a trend that's been going for ages. I do hope that this might turn that around a little bit, because I know certainly from people I know and people I've been talking to, is that, you know, the only way they've been able to access exhibitions is through visiting galleries again, and through visiting local galleries. So it has in some ways kind of brought back some foot traffic to galleries, even if it's kind of socially distanced and a little bit more spread out. It is bringing back people to see exhibitions in galleries. I mean, these were the kind of the only options for people, and certainly the most flexible ways to visit and to view art. So I do hope that this kind of decline that we've seen in gallery attendance and is being that might be a new normal. You know, I do worry that the number of traditional kind of galleries will decline, but I do also think there might be more types of businesses in the future. You know, there could be, again, when I started doing the reports years ago for TAFAF, there was pretty clear galleries and auctions, and you know, there's nothing else to put in that kind of mix. But there's so many other kind of agents operating in the market now, and I think that is going to expand in future as well. So I think I mean, hopefully this will be a different market that emerges. You know, I think it's been such a break now in the calendar that people will be looking for something. They want to return to events, and they want to return to fairs, but it'll be alongside changes, I think, for sure.
Oh, it's interesting. Well, I'm going to be opening up to questions in a minute. And in fact, for those who are watching this, there's a chat button at the bottom of the screen if you want to ask questions. We already have quite a few. But just before, while if you're preparing your questions, just before that, I've got one final thought that I wanted to ask you. What do you think is the most important thing the art trade has learned so far during this pandemic?
I suppose it's to, I mean, it's just as I was saying, that we've all used this time to kind of reflect a little bit and to consider what we miss and what we don't miss. And I think apart from the kind of calendar and how people sell and how we interact, I mean, I think the art market, and I was talking to somebody actually very senior in the auction sector about this quite recently. I mean, that the art market really has to look at its image as well. You know, it's this kind of been a drive, I suppose, for it to become a very sort of high-end, financially driven, somewhat kind of opaque marketplace where kind of wealthy people interact and buy and sell things. And, you know, that's made it into a kind of a slightly unsustainable hierarchy, because we all need the kind of smaller independent galleries and things like that to survive, and the artists to survive, for the whole thing to work. So that hasn't worked that well. And also a kind of a negative externality from all that is it's made the market much more open to regulation as well. It's a complete scapegoat when governments are looking for somewhere. If it's seen as a rich kind of financially driven marketplace, it will continue to be more and more the focus of regulation. So I think it needs to look at its kind of identity and its image a little bit and figure out how to be more democratic, more kind of diverse, more transparent, all these kind of things. And I think this pause has brought these issues a little bit more to the fore. And I mean, online does help that in some ways, but I think a lot of these issues are a lot more complex. And I think that another big lesson, as I said, is just this idea of partnerships and collaboration, because that's not just on the business side, again, and not just about talking to government as one voice, but also to address some of these bigger social issues that can't be done in isolation. So I think thinking about its identity and kind of collaborating and working on its image a little bit, I think are things that I hope that the art market is looking at now. I know a lot of people are. These are the things they're telling me they're interested in, and hopefully they'll be the things that lead it forward.
Very interesting. So I'm going to pass to questions. We had a few email questions. I'm going to read one, which is, okay. What do you think about art secured loans? And how has this service grown or not in the last months of uncertainty?
I mean, I don't have any hard, fast figures on. I mean, art lending is a thing. I've been quite interested in this area for many years. It's nothing particularly new. Obviously, it's been around in some shape or another since the 1970s. I think Anders Peterson produced a report that on art finance and said it was about 25 billion, I think, in outstanding loans last year.
Yes.
So it is a substantial industry, and appraisers I've spoken to recently are certainly getting more queries about kind of valuing works of art for using art as collateral. So based on that, I think it has probably been quite active during this period. And I think it's also going along with the run of low interest rates that we've had. This is what's quite very appealing about lending as well. But I mean, I think there is a variety of services from facilities that have been around for a long time that kind of are based on the creditworthiness of the collector to actual kind of businesses that are based on kind of a glorified pawnbroker model. So there's a kind of a huge range of businesses, but a lot more substantial businesses in between have developed. And I think banks have been lending on other tangible assets like property for as long as I think they've been around. So I think it's fulfilling an important role. I mean, I think it's, I was quite surprised when I looked into it some years ago. There was about the complexity of the transactions that it's actually used for. So it's not to kind of bail people, broke collectors out, this kind of asset rich, cash poor collector that needs needs to sell something off to survive. It's actually for very kind of complex transactions, for diversifying assets, for kind of estate management, and even in divorces and then in charitable giving, all these kind of different aspects too. But I mean, I think it is one thing about the industry that does surprise me is that I mean, there's more and more companies and they're doing more and more complex transactions, but they're still not, I'm not aware of a company that really underwrites art as an asset. I mean, banks avoided it because it was a kind of a tricky asset to value, and those things still hold. But, I think most companies that are around get a fair market value from an appraiser, and they use some kind of a rule of thumb, then say, well, we'll lend you half the value of that, or 40% of the value, whereas they don't actually underwrite it properly. I'm only saying this because I wrote a couple of academic papers about 15 years ago, or 10 or 15 years ago, with a professor in SMU in Dallas, and we looked at a way to underwrite art, and we used auction data. And a big critical thing we found is that all of these models and a lot of indices as well, there's two big risks, I suppose, when you sell something at auction. The first is that you don't get what you wanted, so the price goes below the estimates. And the second thing is it doesn't sell at all. So this is the big risk. If you're using art as collateral, it's not just that you don't get the price you want, it's that it's a buy-in at auction. It doesn't sell at all. So it's not like other assets where there is completely liquid markets. There always is that risk that you need to factor into. And this is with indices and with banking products with value at risk models and things like that. So I think it is a very interesting area. And there's obviously a need for it because these companies are growing and there's a huge amount of lending being done. So, but there is, it's a difficult way to value. And I think probably what's happening is the people that are running these companies are so experienced in the art market. They're doing that you know, they know that those risks and they're factoring them in, but it just surprises me with all the metrics and kind of technologies and modeling that someone hasn't found a kind of a better way to underwrite it purely based on the value of the artworks. But it's an interesting area to keep an eye on for sure.
So we have a lot of questions. I won't be able to do all of them. This is one of them. Claire, do you think that the crisis is forcing prices on the artwork to drop? Meaning, is there a downward pressure on art because of the crisis on the price of art?
I think there is no price as such. I think, you know, that there's certainly it's really a supply-driven marketplace. So it's always been what comes onto the market, and this is particularly in the auction sector. I think what happens in a crisis like this is people just don't perceive it as a good time to sell. So if you have something that you want to sell, certainly at the high end, I would, you know, people aren't in a rush to put it on the market right now. So it does tend to get people to hold back. And that's what causes the value to go down, rather than the price hasn't altered for that particular work. The price is still very stable, but just people hold back. And when supply dries up, the market goes down. So it's not necessarily a pricing thing. And we've seen that if something comes onto the market, still people are there waiting in the wings to purchase it. But I think it's a supply issue, and people perceiving it as not a good time to sell, and they will hold back. And that's what might cause issues at the moment.
So we have another question here, which is, haven't we already witnessed to an extent a market cleanup? How come the new anti-money laundering regulations, you know, the EU and UK, are not the talk of the town in the same way as last January?
Well, it's interesting. You know, the AML regulations are causing is a lot of hassle and admin hassle for businesses. So, I mean, to be honest, the regulations that are there are not. Most businesses have been doing that. Have been gathering that information for the last 10 years. So anybody operating at a high level, you know, gathers that much information. It's just what they've been put through kind of admin hoops, and it's creating a lot of complexities and red tape for them, and they have to kind of assign a person in their business and all these kind of extra costs. So the actual kind of requirements are not new for many businesses, and most businesses in the art market. There's kind of a very incorrect perception that they're kind of all slightly shady or don't collect full information on their buyers, and that's you know, nonsense for most businesses. To be honest, it's no big change for most businesses, certainly in the UK. I think that's probably why. I mean, they've given people a holiday as well to implement some of these things, and maybe that's not why it's not the front focus. And obviously it's not yet come in to the US either, but it could be down the road. It's something that's being discussed in the US quite a bit. But I mean, I think a lot of bigger businesses are doing this. I think it's going to be one of those things that has a huge amount of kind of setup costs, but the art trade will find good ways, whether it's through technology or whatever needs be, of making these changes. And you know, it's the same with lawyers and all other businesses that you transact with. Is kind of it's a hump that you need to get over. But I mean, a lot of businesses already collecting all this information. It's that new. I think that's
other sectors have had to deal with this for much longer. It's just been extended to market participants. So another question here, you mentioned the need for alternative smaller galleries to survive, but how can this be achieved considering that what we see today is a trend for galleries to merge or to be purchased?
We're seeing that for some galleries. You know, I think I don't think that's happening for all small galleries, but you know, I think it's very important for the infrastructure. I mean, I'm not clear exactly how it's done, but you know, in every kind of arts industry, you need small independent producers to kind of for the industry to kind of develop the stars of the future. And this is what happens in all aspects of the arts, not just in music and in other areas as well. So I mean, I don't have the magic kind of panacea of how small galleries survive. I guess it's just people kind of broadening their interests, and you know, there being kind of forums for them to engage in audiences. And I mean, art fairs you know, can help, and bigger galleries can help with smaller galleries. I don't think it has to be you can collaborate with a bigger gallery without them necessarily buying you out, or and I think the more of those kind of vertical collaborations, independent vertical collaborations rather than merging businesses together, I think we'll probably see more of them in the future, hopefully.
So here, this is very nice. Thanks for these great considerations. How do you think the primary market has performed in these months versus the secondary market? So it's an interesting question.
I don't know the answer. I mean, it's something that I'll be looking into for the end of the year. I mean, I think I think the secondary market has suffered. I think the primary market has, it might not, the value might be different, but I think in terms of the secondary market is where you see that hold back that I was just describing, where people don't perceive it as a good time to sell. So if you're reselling something, you will hold back. So I think that will affect the secondary market more than the primary market. So I think the secondary market might be bigger, but the primary market might be a little bit more active, hopefully, especially online.
Well, interestingly, there's another question that's sort of a little bit similar. How do you think these COVID changes might influence the access that emerging artists have to galleries? So that's a primary market question.
Well, I mean, I'm not sure how much that's changing. I mean, I think there's a kind of I think galleries still kind of work in a lot of the same ways. I think their interface with collectors is changing, but I think they work long term with galleries. I don't think this will kind of change the kind of career profile of what a gallerist does. I mean, I would hope that as people sell more online, there's more awareness of the different price ranges that can be sold at. So I mean, you would hope that these things spur more sales in a lot of different areas, but I don't think it will change necessarily the profile. But I mean, I've done some really kind of reassuring research. I've just finished a report actually on New York, very established collectors. And I mean, there's a huge interest, in emerging artists. I think it was over, I can't release the results yet, but it was a big share of their, big share of their collections are based around this, and this is very established collectors are based on supporting emerging artists. So, even in that very established collector base in places like New York, which is the hub of the highest price sales in the world, there is people very interested in untested artists and new artists, and I think people have had more time to consider. People do tend to a little bit stick. I mean, this is one thing. If you looked at kind of boomers versus millennials, actually boomers were looking at a lot of new artists. It was kind of an interesting finding. But collectors in Asia as well, looking at more at new galleries and new artists over the period as well. So there's promising signs. There's for emerging artists and emerging galleries. It's just now it's all about survival. Will they make it through, and then how to get visible.
Yes, so here's a question that's actually linked with that, very hot topic at the moment. What will be the impact on the art market of relaxing deaccessioning standards, that's obviously museums, in the US? I mean, I think, when we're talking about survival of these institutions, it's something that needs to be looked at. I mean, it's not a sector I've kind of covered. I've gone into a lot of detail on it, but it's a fascinating area. And, I think we've seen obviously huge redundancies and things. And I think it's a matter of saving an institution. It's something that, they do in the US probably much better than they do in Europe as well. But I think that all these things are on the table now I mean, as I said, it's about survival. And I think part of that could be if, selling a part of a collection is necessary for an institution to survive. It's very difficult. I don't know how they make those decisions. It's not something I've looked into, but I think it's all these things are being put on the table out of necessity, unfortunately, rather than it being a kind of an interesting area to look at. It's all about trying to get through the next 12 months. Yeah. Actually, interesting. Another question that comes back to what you were saying about possibly what the shape of the art market will be in the future. We have a question here, which is, do you see appraisers playing an increased role in the market?
Yeah, no, I think appraisers are critical. In so many areas of the market. I mean, I was talking about art lending, and all these, for all of the information that's available in the art market, and all these pricing things, and kind of databases and various things that come up. I think it's the thing that we will never have enough of is the expertise to sift through all that information and to come up with valuations and things like that as well. So I think they have, as the data in the art market expands, the role of expertise becomes not less critical, but absolutely more critical. And I think appraisers are hugely important going forward. I'm actually doing a talk for the Appraisers Association in the first week of November, so I'll give them a shout out. They're the best audience ever. They're just so engaged, and they're a fantastic association. So, but no, they have a critical role, and they're, I mean, I really do. All I worry about in this area is the auction data, and because they do rely not just on working with galleries on finding information, but also having those visible prices in the auction sector. And I just know from some of the auction houses have closed down some of the online sales and are not publishing transaction by transaction prices. And it's really bad for the industry if that happens, because it becomes so much more opaque. It looks like it's more transparent, but in actual fact, it's much more opaque, and it'll really affect their jobs if that happens going forward too. So it's really important.
Well, I'm afraid because we have so many questions, I won't be able to ask them all, but there's one more, which is rather broad, but you're such a specialist. Can you just comment on geographic differences between in the market? What have you seen this year? Have you seen, I mean, you always give us a hit parade, so to speak, of the largest market.
Yeah, I mean, we did say, for example, just taking the gallery survey that we did, there was kind of some regional differences. For example, the Asian, I mean, the US galleries are about normal. They were kind of, skewing the results a little bit with some of the very high end. It was kind of turnover weighted. But the galleries in Asia and kind of Greater China fared a little bit worse in the first 6 months. But I mean, I think there's a lag in how this is playing out. There's obviously they didn't have those first few months of the year, so they're a few months ahead, and they possibly will recover quicker. There's a lot of very positive indicators in the kind of economy and kind of around travel and things like that. I know China's just formed a bubble with Singapore, travel bubble. These kind of very beneficial things that are happening. So I think, the Asia certainly didn't do very well at all. Asia, China, that kind of side of the market didn't do very well at all in the first 6 months. But I think they might be a little bit of a step ahead of where we're at now, whereas the kind of US did about average. And again, there was one or two very kind of interesting outlier sectors. People in, for example, in Australia, in some parts of Asia, and in kind of more far-flung, I suppose, markets that actually did really well over this period as well. And I think they were kind of saying in the survey that their collectors are usually on the move all summer, and going places, going to events and things like that, whereas they were kind of stuck in in places, and they were kind of had a captive local audience for once. So it worked well for them then. And I mean, that's a trend that I hope. I think it would be terrible if we don't travel and we don't kind of visit new places. But I think, focusing on things at home as well, if you can do that in conjunction with traveling a little bit less, it would certainly be better for local galleries and better for the planet as well. We have to think about sustainability. It can't take a backseat again just because we're focusing on other areas. I mean, obviously kind of safety and health and everything are at the forefront now, but this idea of sustainability, I think, will rise again as things become a little bit more normal again. I think we're going to see that as a big issue again. And some really interesting companies I've been talking to for the last while, working in possibly some of the more boring areas of the art market, of logistics and packaging and transport and all those kind of things, doing some great work, and a lot of new business ideas coming out of there. So that's great to see.
So that is a really fantastic way to end, because at least we're ending on a rather positive note. Quite alarming statistics at the beginning. Claire, I want to thank you so much for all your insights, and I'm just sorry that we couldn't get more questions in. So thank you, Claire.
It's a pleasure. Thank you.
This was the last in our series for the Art Newspaper Live, which was held in partnership with Cromwell Place. And if you didn't catch it, or if you want to recommend it, if the viewers want to recommend it to somebody else, it will be live from tomorrow on the Art Newspaper's YouTube site. And I'd like to also thank you. You don't see them, but there's a team that made this all possible behind.
Absolutely. Thank you.
Also, don't forget to listen to the Art Newspaper's podcasts with Ben Luke. There's a new one every Friday. And in fact, the one that's coming tomorrow is going to be talking about museum deaccessioning. So thank you all to all of you, wherever you are, for listening, and goodbye.